Southwest Airlines stock, ticker symbol LUV. This stock is up 2% on the year-to-date chart, underperforming the SP500, and it has been a bumpy ride so far this year. Southwest Airlines presented quarterly earnings on the 25th of January, where they beat on both the EPS and revenue by a decent margin. But for the upcoming earnings, analysts have a mixed feeling. And people love Southwest Airlines stock because of multiple reasons. One of the interesting things being the dividend, and I understand why with dividend yield at 2.5%. If we look at the past 5 years, we see that Southwest has a rough time due to the lockdown periods, and they never fully recovered from it if you look at these returns. But could this be the perfect time to buy LUV stock, or aren't we near the bottom yet? Well, by the end of the video I will give you my 3 price targets, so make sure to stay tuned and see how I build up to these price targets. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does Southwest Airlines do? Southwest Airlines is the largest domestic air carrier in the United States by passengers boarded. Despite offering some longer routes and a few perks for business travels, the airline specializes in short leisure flights, using point-to-point network. Southwest operates a low-cost carrier business model. And if we dive in the most recent earnings report, we see that fourth quarter net income excluding special items was reported at $233 million, or $0.37 per share. Full year net income was reported at $986 million, or $1.57 excluding special items. For the revenue, it is also looking pretty interesting, with a record fourth quarter of $6.8 billion and $26.1 billion for the full year results. Liquidity is at $12.5 billion and debt is at $8 billion, looking pretty decent. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. Southwest is a 17 billion market cap company. PE ratio is at 37, indicating they are at a premium right now. But look at that 5-year PE, 71. Keep in mind that Southwest was hit pretty hard during the lockdown periods, and they are still recovering from it. Later in this video I will show you my 3 price targets for Southwest Airlines stock, so make sure to watch until the end. Revenue is at 26 billion, and in this graph we see that revenue went up in the long run. We see the impact that lockdown periods had. They quickly recovered from it, and most recently the revenue growth numbers are in line with pre-lockdown numbers. Margins were going up pretty good in the past decades. Then lockdown periods came and margins plunged. After that they recovered pretty good, but most recently the margins are going down again, also due to higher fuel cost of course. EPS is pretty much the same story as the margins. It went up pretty consistent, but most recently it is coming down again. Analysts have mixed feelings for the EPS in the coming years. They expect only 5% growth in 2024, but in 2025 they expect to see 50% growth. In 2026 only 3%, and in 2027 they have again big expectations. Down the line, it is expected that in 2027 EPS will hit $3. For the revenue, analysts expect a bit more steadier pattern, with 5 to 8% growth in the coming years. Return on assets is sitting at 1%, which is a low number. Return on equity looks a bit lower as well, and the most important number, return on invested capital, is sitting at roughly 1%, which is a low number. It is slightly lower versus the 5-year average, which is something to keep your eye on. And next to that, these numbers are highly impacted by the lockdown periods and the after effects of that. Current ratio is at 1.14, which is a great number. It is also pretty consistent historically, so this looks good to me. Right now, Southwest has 9 billion in debt, and I prefer companies that can pay on at least a big chunk of the total debt with the total cash. Southwest has 11.5 billion in total cash, so they can pay down all of their debt. To me, this is a really good sign and also one of the main reasons why I like this company so much. But it is still very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow was going up pretty consistent, pre-lockdown periods, but after that they never had the consistency again. Shares outstanding are decreasing in the long run, which is something that I really like. We also see that in the lockdown periods they issued a lot of shares. I'm not blaming them for that, since it was necessary to survive. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 2.5%, which is a great number. Annual payout is at $0.72 and payout ratio is at 45%. I prefer 50% or lower, so right now they have 55% left in cash to buy back shares, pay down debt, do acquisitions and all other things. The growth numbers are impacted by the lockdown periods, where they cut the dividend of course. And if you take a look at these numbers, the dividends paid since 2012, you see that Southwest did increase the dividends at a pretty high rate. In 2020 they cut the dividend. From there, they are increasing the dividend again. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. In here we see that historically it looked really good. The current payout ratio is twice as high as 2019 numbers, so that's something to keep your eye on. In this graph we see the expected dividends in 2023, 2024 and 2025. Of course, this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to increase slowly from here. Overall, the dividends look really good to me, but how about the historical returns? I decided to compare Southwest Airlines stock with the overall market, in this case the S&P 500. Next to that I added United Airlines. On the 5-year chart we see that Southwest underperformed the S&P 500 big time with minus 40% return. It is the same story for United Airlines. The S&P 500 had almost 100% return. On the 1-year chart things look pretty interesting with a minus 6% return for Southwest. But United Airlines managed to get a 9% return. The S&P 500 is the big winner here with 29%. On the 6-month chart it is again the S&P 500 that is the big winner here, with 23% return. But this time both Southwest and United Airlines managed to get a positive return. On the 1-month chart it is again Southwest that's taken a beating, with minus 14% return, while United Airlines takes off at 5.5% return. Bottom line, Southwest Airlines was beaten by the S&P 500 in the long run and in the short run. So could this be the perfect time to buy Southwest Airlines stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 3, 4 and 5%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm putting in 2, 3 and 4%. For the free cash flow margin I'm putting in the same numbers. For the PE ratio I'm putting in 18, 20 and 22. For the price to free cash flow I'm putting in the same numbers. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now Southwest Airlines stock is around $29. I hit analyze and we see a lot of red numbers. We have a low price target of $10, we have a mid price target of $18 and we have a high price target of $28. And to me the high price target is the most justified here, telling me that this stock is still looking overvalued. Which price target do you think is the most justified? Let me know in the comments down below. My final conclusion on Southwest Airlines is that it is an interesting company. They were hit big time during the lockdown periods and they seem to recover pretty decent. But the current margins are still a big problem. The fact that they can pay down all their debt is looking really good to me, but they really need to work on those margins in order to be an interesting value play. From a dividend point of view, things look pretty decent with a decent yield and potentially a great growth record. From a value point of view, things don't look that great. For now, I'm skipping this stock, but I will keep my eye on them, since they are an interesting company in the end. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.